The rise of cryptocurrencies has sparked heated debates about their utility and importance. Some maintain that Bitcoin is the only cryptocurrency the world requires. Bitcoin's decentralized nature, combined with a restrictive supply, has made it a haven asset for many investors. Is it, however, the only cryptocurrency capable of resolving the issues plaguing our current financial system? What about the environmental concerns associated with its mining process? Let's find out. You would have to understand Bitcoin's history and legacy to see why it is considered by some to be the only cryptocurrency that humanity needs. The origin story started in 2008. An unknown person or group known as Satoshi Nakamoto published a white paper outlining a peer-to-peer electronic cash system. This paper talked about the concept of a decentralized digital currency that could be transferred directly between people without the need for intermediaries. This was the birth of Bitcoin. Since its invention, Bitcoin has quickly gained popularity among tech enthusiasts and regular folks, seeking an alternative to traditional financial systems. A decade later, Bitcoin has evolved, becoming more accessible and widely accepted. It has undoubtedly had a significant impact on the world of finance and technology, kickstarting a movement that has led to the creation of thousands of other cryptocurrencies. Bitcoin's legacy is not just in its impact on the cryptocurrency market, but also in its influence on the way we think about money and financial systems. Now, the pertinent question is Bitcoin the cryptocurrency that humanity needs? Let's start with one of the most significant features of Bitcoin. The very fact that there is no central authority controlling Bitcoin, making it more secure, transparent, and resistant to manipulation, is what makes it unique. With no central authority, there is no central point of failure that can be attacked or compromised. In comparison with centralized systems where they are more vulnerable to hacking, fraud, and other attacks, Bitcoin's decentralized network makes it much harder for attackers to take down the network or steal funds. With decentralization, Bitcoin users also have more control over their funds. They can send and receive funds directly without relying on intermediaries like banks. This gives you more privacy, security, and autonomy over financial transactions. There's also the aspect of transparency. Transactions on the Bitcoin network are recorded on the blockchain, a public ledger that can be accessed and verified by anyone. This ensures that there is no room for fraud or corruption, and it creates a more level playing field for all users. Bitcoin's value is also not controlled by any central authority or government, making it a more stable and reliable store of value than fiat currencies that can be manipulated by central banks or governments. When it comes to moving large sums of money, the process can be costly and time-consuming. For example, if you wanted to transport $100 million worth of gold, the cost would be around $250,000. However, the time it would take to move this amount of gold is a different story. It could take anywhere from a week to a month or more to complete the transfer. The uncertainty around the timeline and cost can create significant challenges for those looking to move large sums of money. This is where Bitcoin comes into the picture. Moving $100 million in Bitcoin would only take around 30 minutes, and the transfer fees would be minimal, costing just a few dollars. The efficiency and speed of Bitcoin make it an attractive option for those looking to move large sums of money quickly and at a lower cost. The speed and efficiency of Bitcoin highlight why it is the only cryptocurrency that humanity needs. Its ability to move large sums of money quickly and cost-effectively make it a game-changer for the financial industry. Also, its decentralized nature and the blockchain technology underpinning it provides a level of security and transparency that traditional financial systems cannot match. Bitcoin's ability to move large sums of money quickly and at a lower cost than other asset transfer methods, coupled with the scale of the assets it can transfer, make it an ideal cryptocurrency for the financial industry. As more individuals, institutions, and governments recognize Bitcoin's unique properties, it has the potential to become a global reserve asset that can serve as a hedge against currency devaluation and geopolitical risks. Bitcoin has the potential to serve as a hedge against inflation, a looming threat to many fiat currencies around the world. With central banks printing money at unprecedented rates and governments taking on record levels of debt, many investors are looking for alternative assets that can protect against inflationary pressures. Bitcoin's fixed supply and deflationary nature make it an attractive option for such investors, particularly given its potential for long-term appreciation in value. Another advantage of Bitcoin as a reserve asset is its liquidity and global appeal. With a large and growing user base combined with its global market infrastructure, Bitcoin has the potential to become a truly global reserve asset that can serve as a reliable store of value for individuals, institutions, and even governments. The Bitcoin community is made up of a diverse group of individuals, developers, miners, and businesses who all have a stake in the success of the network. This community is united by a shared vision of a decentralized and censorship-resistant financial system that empowers individuals and protects against currency devaluation and inflationary pressures. The nature of Bitcoin's governance means that decisions about the future of the network are made through a process of rough consensus among the community members. Anyone can propose changes or improvements to the network, and these proposals are subject to rigorous debate and scrutiny by the community. Changes to the Bitcoin protocol are made through a process of rough consensus, where the community reaches a broad agreement on the best path forward. The governance model has enabled Bitcoin to evolve and adapt to changing circumstances and challenges over time. For example, when the network faced challenges related to scalability and transaction fees, the community came together to propose and implement solutions such as the Lightning Network and Segregated Witness (SegWit). The decentralized nature of Bitcoin's governance also helps to ensure the network's security and resilience. Because the network is not controlled by any centralized authority, it is more resistant to censorship and attacks from external actors. In addition, the network's hash power, which is distributed among a network of miners, makes it more difficult for any individual or group to control the network. Due to its decentralized structure and potential to disrupt existing financial systems, Bitcoin has become a popular subject for game theorists. Bitcoin's game theory favors the cryptocurrency by providing incentives for network participants to behave in ways that benefit the network as a whole. For example, Bitcoin miners are rewarded with new Bitcoins when they contribute computing power to help secure the network. This creates a self-reinforcing cycle where miners are incentivized to continue mining, which in turn helps to secure the network and maintain its value. Also, Bitcoin's limited supply and decentralized nature create a game theoretic scenario, where participants are incentivized to hold on to their Bitcoins rather than spend them. This creates a scarcity effect that drives up the value of the currency and makes it more attractive as a store of value. Overall, Bitcoin's game theory provides a framework that incentivizes network participants to support the network's security and value, creating a self-sustaining system that benefits all participants. Bitcoin's growing adoption and acceptance by individuals, institutions, and governments worldwide is an indication that it is gaining mainstream recognition as a legitimate form of money and investment. This trend is driven by several factors, including the increasing recognition of Bitcoin's unique properties as a decentralized and censorship-resistant store of value and means of exchange. One of the key drivers of Bitcoin's adoption has been its growing acceptance as a payment method by merchants and businesses around the world. Today, many major retailers and service providers accept Bitcoin as a form of payment, including Microsoft, AT&T, Expedia, and Shopify. This acceptance has been facilitated by the growing availability of payment processors and other infrastructures that make it easier for merchants to accept Bitcoin. Another factor driving Bitcoin's adoption is the growing interest from institutional investors and asset managers. Over the past few years, an increasing number of institutional investors, such as hedge funds and family offices, have added Bitcoin to their investment portfolios. In addition, major asset management firms, such as Fidelity and BlackRock, have started to offer Bitcoin investment products to their clients, further driving institutional interest in cryptocurrency. The growing recognition of Bitcoin's potential as a global reserve asset is also contributing to its adoption. As more individuals, institutions, and governments recognize Bitcoin's unique properties as a decentralized and apolitical store of value, it has the potential to become a global reserve asset that can serve as a hedge against currency devaluation and geopolitical risks. Finally, the growing regulatory clarity around Bitcoin is also contributing to its adoption. While there is still some regulatory uncertainty in certain jurisdictions, many countries have started to clarify their stance on Bitcoin and other cryptocurrencies. This clarity has helped to reduce the perceived risks associated with Bitcoin, making it more attractive to both individuals and institutions. Bitcoin and Ethereum are two of the most popular cryptocurrencies in the world. However, they are treated differently under U.S. law. Bitcoin is generally considered a commodity by the U.S. Commodities Future Trading Commission (CFTC). This means that it is subject to regulation by the CFTC, and its use and trading are governed by the Commodity Exchange Act. The CFTC regulates Bitcoin futures and options trading. and it has the power to investigate fraud and market manipulation. On the other hand, the Securities and Exchange Commission (SEC) has taken the position that Ethereum is more akin to security than a commodity. The SEC's view is based on the way in which Ethereum was initially distributed through an initial coin offering (ICO), which the SEC considers to be a form of securities offering. The SEC has not formally classified Ethereum as a security, but it has taken enforcement actions against ICOs that it considers to be illegal securities offerings. The distinction between Bitcoin as a commodity and Ethereum as a potential security has implications for how they are regulated and how they can be used. For example, Bitcoin can be traded on futures exchanges and can be used for payment without the same level of regulatory scrutiny as securities. Meanwhile, Ethereum and other tokens that are classified as securities may be subject to more stringent regulation, including registration with the SEC, which can make them less attractive to investors and users. While some people argue that Bitcoin is the only cryptocurrency humanity needs, others believe in the potential of alternative digital assets. Which side do you fall on? Do you think Bitcoin is the future of money, or do you see room for other cryptocurrencies to play a role in our global financial system? Share your thoughts with us in the comments below.